Hello everybody, it's Yashar here, back again with another video, and in this video I will cover EQB earnings report which released last night after the market closing bell. EQB is the largest holding in my stocks portfolio. I personally have 200 shares of EQB, or a little bit over $16,000 invested in the company inside my TFSA account. And I really think this is one of my investments that will significantly outperform the market in the coming years. For those of you who are not familiar with EQB, EQB is the 7th largest Canadian bank by market cap and is a fast-growing digital bank and a competitor for conventional banks in Canada. They have around 600,000 customers across Canada with over 110 billion Canadian dollar in assets under management. This company is not only growing fast in all metrics, but also they have an extremely low valuation for a bank stock, and that's why they are my number one stock in terms of the weighting in my stocks portfolio. EQB reported their earnings last night, and I really like everything I see in this report. They absolutely crushed the earnings with record profits, deposits, number of new customers, and their fast-growing revenue and book value. Market reaction to this report was positive at the market open, and the stock is up around 1.5% at the moment. But I have no idea how it goes in the next couple of days, as the market reaction and the actual report usually do not align perfectly. I actually expected the stock to be up more than 3% after these numbers, but it is barely up 1% right now. Now, let's look at the most important parts of these quarterly results. First of all, the most important growth driver of EQB, which is new customers, is still growing extremely fast. EQB customer base is up 9% quarter over quarter and 30% year over year, which is massive growth. They are taking market share from big banks left and right and continue to grow their customers extremely fast. Next, one of the most important metrics to evaluate a bank stock is the book value of the bank. Book value of EQB increased 4% quarter over quarter and 12% year over year, which is again a fast growth. EQB book value per share is now $70 Canadian dollar, which means the shares of EQB currently trades very close to the book value of the stock. Next, the actual assets under management, earnings per share, and revenue are all up considerably this quarter, which means the top and bottom line of the business still growing. On top of that, net interest margin, which shows the profitability of a bank, increased by 1 basis point to 2% in this quarter. It means EQB not only growing their revenue and earnings, they are also more profitable and are also increasing the profit margin at the same time, which means more cash flow for the investors in the future. The return on equity is also at 16.5%, and their CET1 ratio, their capital ratio, which is a risk prevention factor, is at 14%, which is very healthy. Absolutely amazing numbers in this report all the way. They also increased their dividend once again by 5% quarter over quarter or 21% year over year to remain in the target of annual dividend increases of 20% to 25%. Chief Financial Officer of EQB comments are very interesting for me about these numbers. Fiscal 2023 again validated the strength of EQB across economic and credit cycles. Our focus on diversifying source of funding, revenue, and asset classes positioned the business to perform above the increased guidance we provided last quarter. Our 2024 outlook recognized both near-term economic challenges and the strength of our distinct challenger business platforms. We benefited from the Concentra Bank acquisition over the past year and grew sources of non-interest revenue. With this momentum and our strategic roadmap, we believe EQB can deliver increasing long-term value to customers and shareholders. Now, let's take a look at their 2024 outlook. Return on equity in the range of above 15%, which is good. Diluted earnings per share around $12 per share, which would be a significant increase in the EPS of the company. Dividend, basically an increase of 20 to 25%, which is in line with previous expectations again. Book value per share can be up 13 to 15%, which means you can expect the share price to be up around 15 to 25% in the next year. CET1 ratio at 13% plus, which is in line with current capital requirement of the bank. They also predict another 30 to 40% customer growth in the next year, and another 8 to 12% increase in their assets under management. Note that EQB management team is always conservative with their outlook, and they have a habit of outperforming their outlook with the actual results. Just look at the actual performance of the company versus their outlook in 2023. They almost beat every single number in the actual performance, which is great. I like the management teams that underpromise and overdeliver. All in all, I'm extremely happy with EQB earnings report, and I believe this stock will continue to outperform all the indices in the coming years. There you are, guys. I hope you enjoyed the video. If you enjoyed the video and my coverage of earnings report of Canadian companies, consider subscribing to the channel to see similar videos. I will release a new video about Brookfield Corporation soon, but until that time, I see you guys in the next video. Farewell.